Hello everyone, this afternoon on the marketplace, crude oil records gains in prices over the past few weeks, hitting $85 a barrel. We are at a tipping point, and what could be the implication for fuel prices locally? Also coming up, National Petroleum Authority says citizens without Ghana card risk being excluded from the cylinder recirculation model program.
This have been an investment by a bottling plant. We need to know at every point in time who has it. So it's a simple registration process.
Also ahead, despite the effect of the domestic debt exchange program on consumer confidence, EcoBank remained the biggest bank in Ghana in 2022 with a market share of 13.58%. Meantime, bank deposits more than doubled last year. We will discuss. My name is Daryl. Kwawu. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. Crude oil has been recording gains in prices over the past few weeks. Last Friday, Brent Crude hit $86 a barrel after top producers Saudi Arabia and Russia extended supply cuts through September, adding to undersupply concerns. What are the implications for us? Joining me on Zoom is energy strategist Yusuf Suleimana, also CEO of Eureka Energy Solutions, and emerging energy consultancy firm. Thank you for joining us this afternoon. As we look at the prices right now, Brent Crude $85 a barrel. Are we heading to another tipping point? And tell us more about what is accounting for this rally.
Yeah, thank you very much, Daryl. Good afternoon to you, and good afternoon to your cherished viewers in Ghana and across the globe. And thank you for having me once again. Yeah, so indeed, that's very interesting. Things are developing very fast within the international scene. Indeed, within the week, we have this kind of bullish sentiment that is setting into the market. Typically, we have three category of factors that are accountable for this. One would be the recessionary tendencies that is beginning to tame down. The second one being OPEC cuts that you have just mentioned. And then the third one is revitalization of the Chinese economies. If you look at these three factors, Daryl, I think at this moment in time, what is holding much potency in deciding what the prices are prevailing, what the price is actually being sold at the current market is supply destruction. We have quite a number of supply destructions that is happening within the market. Yes, so not even this quantitative tightening in terms of this exchange rate, policy rate hikes from the central banks, notably Feds from the US, and then the ECB, that is European Central Bank from the Eurozone, is able to tame the prices. So yes, OPEC have announced, they have, especially OPEC kingpin Saudi Arabia, they phenomenally has announced that they will keep the supply cut of voluntary 1 million barrels out of the market. That is huge. Alongside, Russia has also announced that they will also take about 0.3 million barrels out of the market. That is huge. So we are living a time where these two players, this OPEC plus leader, which is Russia, and then OPEC leader, OPEC kingpin, which is Saudi Arabia, the cohesion is very strong, and they coordinate this activity. So yes, we are now beginning to see that impact being felt on the market. And Daryl, I see that there are two opposing forces. One, the quantitative tightening by the West, in a way that they also want to reduce oil prices. They want to put downward pressure on the oil prices. And then the OPEC guys also equally see that as a market distraction, and they see what their intervention as stabilizing the market. So there are interesting times ahead, Daryl. But what is accountable for the price now is just because of supply distractions, yeah.
For how long would we see this price rally, do you think?
Oh, yeah, so it will, it's early days yet. So the market, we have to just monitor the market. Assuming it stays like this, get it to our next window, so definitely we're going to have pressures coming onto our pump. So the persistence or the sustainability of this price hike will be dependent on the persistence of these factors that are just enumerated. And the situation is still looking fluid. We could have it coming down, but OPEC is bent on keeping oil price at the 80s, Daryl.
What direct impact would it have on the pumps? We're monitoring the currency market as well. The cedi has been fairly stable over the past few weeks.
Yeah, so that's the fact. If you have a multiplicity of factors impacting your pumps, this is what is happening. Sometimes you said your head is aching you before realize your leg is aching you. So yes, cedi could be doing well, and again, the international market is not looking too favorable at this moment in time. So what will happen is that even the stability of the cedi, if this trajectory in the international scene persists, we could have pressures settling on the pumps. But like I said, the direct impact is that there will be much more pressures on the pump if the situation persists for an elongated period of time. But like I mentioned, it's early days yet. We just have to give it, and I'm sure by the end of our next window, we'll have the picture very clear. But I can say that this bullish sentiment, they are looking more potent at this moment in time, than the potential bearish sentiment.
Let's talk strategies. I mean, what can we do? What can we implement to minimize the impact of such rapid fluctuations?
Yeah, that's an interesting one. You see, in Ghana, you are spot on, Daryl. I seem to see that we are living in what we call a strategy vacuum. We lack, a very concerted strategy to be able to tackle this, perennial boom and bust or oil cycle, fluctuations. In most jurisdictions, what they do is, if you have an upstream and your downstream industry, I mean, you should make concerted effort to be able to link up the two. When I say link up the two, you have to have a workable formula so that whenever the upstream is booming, bear in mind that your downstream will struggle. And if you don't have that kind of workable formula where you can cascade some benefit from the upstream to the downstream and then the vice versa, you will always complain when oil prices rise, and you will equally complain when oil prices drop. And that's what is happening. So what I always urge is that in Nigeria, they are taking an excellent cue from this. If you notice NNPC in Nigeria, they are taking serious stake in Dangote's refinery. That's the way to go. Even if you don't have a workable refinery, if the upstream is booming, let's not think that we are having a windfall. The downstream is going to struggle. So let's work out the formula, maybe the X plus that we are not expecting coming from the upstream. Let's have a way of cascading it to the downstream to cool down the pump. Because ultimately, if the downstream burns out, whatever you gain from the upstream is going to vaporize. From where I sit, I think downstream, it has direct impact on the economic growth and economic survival of populace as compared to the upstream. Because once fuel prices are very high, that cascade into your inflation figures, that cascade onto what the common man or common person buys on the streets. So if you can handle your fuel prices fluctuations, then you can just be certain that you cannot have firm handle on your economic, revitalization.
Dr. Issei Sulemana, energy strategist, also chief executive of Eureka Energy Solutions and emerging energy consultancy firm. I appreciate your time with us. Well, next to the National Petroleum Authority, which says citizens without the Ghana card risk being excluded in the cylinder recirculation model program. According to the authority, this is to help in the traceability of the cylinders by exchange point dealers. Deputy Chief Executive Perry Okujeto explains that this is an investment by a bottling plant, hence this move will serve the interests of Ghanaians across the country. He was speaking at a media engagement.
Cylinders have been an investment by a bottling plant. We need to know at every point in time who has it. So it's a simple registration process. You go to an exchange point, you identify yourself, they take your details, and you must have a valid, when you go to a bank to cash a check, you present a Ghana card. If you go to an exchange point, you present a Ghana card. The Ghana card has all your details, has your location, where you live, and all of that on it. So that we can have, or the exchange point can have data, and there can be traceability in case the cylinder goes and for 1 year, it doesn't come back. So that is for the registration. Well, apart from Ghana card, if there's another form of identification that gives the exchange point operator comfort. And the exchange points we have are not going to be too different from what we currently have. What will be different is that they are not going to fill the cylinder on site. The cylinders will be delivered from a bottling plant. That is the only thing that is going to change. So usually you will notice that exchange points have a relationship with the community.
Now, despite the effect of the domestic debt exchange program on consumer confidence, Ecobank Ghana remained the biggest bank in the country in 2022 with a market share of 13.58%. According to the 2023 Ghana Banking Survey by accounting and auditing firm PwC, its market share in terms of banking industry share of deposits was better than the 11.93% recorded in 2021. Here's more in this report.
GCB Bank placed second, but lost some market share in terms of the industry's deposits. In 2022, its market share stood at 10.87%, slightly lower than the 11.43% recorded in 2021. From a trend analysis, GCB Bank has been losing its market share since 2017. The third, fourth, and fifth positions were occupied by Stanbic Bank Ghana, Absa Bank Ghana, and Consolidated Bank Ghana. Indeed, Consolidated Bank Ghana improved its position and overtook Fidelity Bank to fifth place from sixth place in 2021, although its total percentage of deposits to the industry deposits decreased in 2022. At the end of 2022, the other banks in the top 10 of industry deposits were Fidelity Bank, Zenith Bank, Stanchart, Access Bank, and Cal Bank. Again, Ecobank Ghana maintained its position as the bank with the biggest loans and advances in the industry last year. Its share of industry loans was 14.7%. Meanwhile, the banking sector saw a jump in deposits growth by more than double the growth recorded in 2021.
On Zoom with us to discuss some of the outcomes of the Ghana Banking Survey by the PwC's banking consultant, Christian Titijan. Good afternoon to you. One of the observations, Christian, from the survey was a jump in deposits by more than double the growth recorded in 2021. I mean, compared to 12.1% rise observed in 2021, growth in deposits was 31.3% as of the end of 2022. How do you explain this?
And thanks again for having me this afternoon. There were a lot of issues with the government securities run off to the domestic debt exchange program that was making a lot of the institutions to downgrade the government portfolio, coupled with certain uncertainties. The general public had actually gotten wind of a lot of the things that were happening, so they didn't feel their investments actually were safe with the government. So some of them were even terminating prematurely their investments in the government portfolios, even including the T-bills. And those who were discounting it were now placing it with the universal banks in fixed deposits. And that scenario and that trend led to the banks having a rise in their total deposit portfolio as captured in the PwC report. So it was as a result of people losing confidence in the government long-term securities or even short-term securities and now placing it with the banks in fixed deposits.
And the Ghana Banking Survey was themed on how banks intend to build back after a challenging year. We saw what happened with the DDEP in 2022. Now, most of the banks in their responses wish they had taken a less significant position in government securities. Do you think we are going to see that happen going forward? What would the implications be for government?
Yeah, rightly so. Over the years, it had actually never happened when government securities had been in doubt in terms of the risk. And over the years, they had been risk weighted at 0%. So that had given that portfolio a lot of confidence. And of course, now we expect them to have diversified portfolios where they wouldn't be suffering from that concentration risk as they used to do, and all the issues that actually happened with them. On implications to government, we don't really expect that high oversubscription, especially in government long-term securities. The short-term securities, that's the treasury bills, will continue to enjoy high patronage. But in the long run, government will be the ultimate beneficiary, since now a lot of the banks will channel some of the funds that they will have actually invested in the government treasuries now into giving out loans to their customers. And so far as that happens, it begins to expand the economy. And when the economy gets expanded, there are a lot of ramifications and a lot of benefits that the economy will enjoy once it gets expanded. And at the end of the day, it's the government of the day that will actually be receiving the plaudits for some of these things when it does happen.
And again, banks, based on the survey, thought they should have used more robust economic policy analysis and market research to improve their ability to predict economic risks. How significant is this? What do you think would have changed about the outcome we saw in 2022?
Yeah, rightly so. Very few of these banks have got what we call the market research departments that will have been charged to give insight into some of these happenings and predict future phenomenon based on some of these variables that they were going to actually research in them. And that duty or exercise can really not be underrated, and it's a must-have department for all the banks. I wouldn't be surprised if now they are beginning to set them up, or they are springing up in the banks, and it's a must-have, like I've already indicated. Institutions actually thrive on some of these departments for sustainability based on the predictions that they are able to give. And it's not to say that having that department solves all your problems, but at least it gives a bit of leverage in terms of research into the unknown, and the predictions that are actually given into the future will be made, which could be very valuable, significant to the issue that, for example, we are having on hand with the domestic debt exchange program and all of these economic meltdown that the country actually went through.
Well, so with the second DDEP underway, banks appear calm. What meaning should we read into this? Have they got everything under control?
Yes, they've got this under control already. All government portfolios have been downgraded, and even in some instances, provisions have been made, adequate provisions. Some have even made 100% provisions for them, and that culminated in the losses made up by banks in 2022. That was last year. So I would say the worst has already happened. They've seen the worst, and most of these banks also held the dollar-denominated securities, which is the portfolio that is going to be dealt with now. But like I've said earlier, provisions have already been made, and then the impact have already been seen in last year's figures. And with the government support of 15 billion to complement the existing framework by Bank of Ghana, where they give liquidity support to some of these institutions, they appear calmer because they've seen the worst of it, and adequate provisions have actually been made. Which is quite different from the earlier DDEP that happened, where there were so many uncertainties. They weren't sure which ones were going to be touched, which ones were not going to be touched. It was going to be wholesale, which portfolios were going to get exemptions. There was so much uncertainty with the previous exercise, but this one, because they've already made adequate provision, they appear calmer.
Christian Tesijan, great to speak with you this afternoon, banking consultant there. Well, the Bank of Ghana has vowed to strictly enforce the zero financing of government as any breach could affect the country's program with the IMF. The central bank at the beginning of this year commenced the policy as part of the IMF program. However, based on the liquidity challenges facing government, there are fears that the central bank could go back to the program. But Director of Research, Dr. Philip Abredu-Otu, says that will not happen.
If we go against that zero financing, it will have implications for the IMF program implementation, and that might create all sorts of problems for us regarding the triggering of other flows associated with the completion of each IMF review. We would have missed that critical target. It will become big news. It could flip into other things as we move along. For the first 7 months of the year, we've respected that zero financing.
And there hasn't even been 1,000 Ghana cedis or even 100 Ghana cedis support to government to balance the books or to meet a liquidity challenge.
No, absolutely no.
And you are enforcing it to the letter.
We are enforcing it to the letter.
Because I'm asking, it could come with some shocks again for the economy, where government needs some amount of money to balance its operations.
We'll still stand our ground. We'll still stand our ground.
And that is being done.
That is being done.
Let's turn now to the financial markets. Government Treasury bill sale fell short of target marginally as interest rates continue to surge on the money market. Now, according to the auction result published by the Bank of Ghana, the government secured 2.179 billion cedis as against a target of 2.261 billion cedis. Patrick Edemagama is with us on Zoom. Good afternoon to you, Patrick. A bit more detail about Friday's auction and what to look forward to this week.
Daryl, well, on the money market, we noticed that there was a shortfall. Slight shortfall was still recorded, although the monies collected was enough to cover the maturing securities of 2.13 billion. We also noticed that on the 364-day bill, the government rejected about 4 million Ghana cedis due to high yields. Now, the 91-day cleared at an interest rate of 25.57, increasing by 33.06 basis points, whilst the 182-day cleared at 27.28%, increasing by 13.47 basis points. We also saw the 364-day closing at 30.49%, increasing by 18.53 basis points. Again, in this, the 91-day was desired by most investors. It took about 63.6% of the auction against 29.8 and 6.6 for the 182-day and 364-day bill.
And on the stock market, shares of Fan Milk, Societe Generale, and Standard Chartered Bank are expected to dominate the equity market this week. What's happening with those stocks?
Well, we are seeing increasing demand for these stocks, as well as GGBL, Societe. It keeps increasing, and there is limited supply. And again, on the stock market, investors of Bob and Gwel should expect some dividend payments in the course of the week. Bob is paying about 94 pesos, whilst Gwel is paying 0.056 pesos per share.
Anything else to be on the lookout for this week, Patrick?
Well, the government is targeting about 3 billion for the auction this week. We expect interest to be in the short side of the auction, so we expect 91 day to take most of the auctions as usual.
Thank you so much, Patrick Edem Agama there. He is Head of Trading at Republic Securities. Appreciate your time with us this afternoon. Well, our next story is on illegal mining. The vagaries of climate change and the devastating influence of illegal mining on farmlands are taking a toll on Ghana's agric sector, food security, and biodiversity. It has been estimated that the country may, in the coming years, struggle to feed its indigents if measures are not instituted to fight the menace. Fortunately, 50-acre lands in 6 districts within Obuasi and Adansi areas degraded by illegal mining activities are being reclaimed through an oil palm plantation. Emmanuel Kwawu has more in this report.
Several open shallow pits dotted across an abandoned illegal mining site at Adasi on the outskirts of the Obuasi municipality. Like other communities and agricultural plantations ravaged by artisanal mining, the impact of the illegal activities are glaring. Director of Agric for Obuasi East, Yao Osei, says the illegal miners have overtaken lowlands purposed for horticultural produce, threatening food security in the district.
Most of the lowland areas which were used to cultivate vegetables and rice have been taken over by these galamseyers, these activities of galamseyers. And if care is not taken, it will go a long way to affect the food production in the district, which will also go a long way to affect the food security situation in the country in general.
Formation of sinkholes, contamination of soil, and loss of biodiversity are a few of the deleterious impacts of illegal mining on farmlands. There have been urgent calls on the government to find pragmatic solutions to the menace. In its bid to salvage the worsening situation, AngloGold Ashanti Obuasi Mine, through its 10-year socio-economic development plan, is converting about 50-acre degraded lands in the Obuasi municipality and 5 adjoining districts into agroforestry block farms. Launched 2 years ago, the climate resilient oil palm project is expected to contribute to Ghana's deforestation mitigation targets by the end of 2026. Daniel Artabentum is Sustainability Superintendent at AGA Obuasi Mine.
As part of our socio-economic development plan, 10-year plan, agric intervention is one of the key areas that we are looking at. So if you look at the plan, we've made several support towards agriculture. One of the key or highlight areas is the climate resilient oil palm project. which is affecting about 6 districts within the Adansi enclave. And this is to try and then see how we're able to use oil palm to reclaim lots of the land that have been degraded or that has been used for mining purposes. The study with Solidarity that shows that the Adansi enclave is climate vulnerable.
Nearly 30,000 oil palm seedlings of 2 variants are being distributed to over 2,500 farmers in the Obuasi Municipal, Obuasi East, Adansi North, Adansi South, Adansi Asokwa, and Adansi Akrofom districts.
So right here in the seedling yard, we have about 2 varieties. That is the palm millet, and then also the one we got from Ghana, Sumatra. Each of these seedlings have their strengths, and we would want to sort of put it across the Adansi enclave and learn from it. One is good and resistant to drought. The other also comes in abundance when it's seasonal, and these are the balances that we want the farmers to have, such that in their farm you see different varieties and withstanding different conditions that we face within the Adansi enclave.
And that's the marketplace. Thanks everyone for watching. There is more news on our website, myjoyonline.com/business. We will assign Ghana positive rating once local currency bonds held by pension funds are restructured. That's according to Fitch. You can find that story on myjoyonline.com/business. Let's go up one more. FBN was most liquid bank in Ghana in 2022. That's according to the 2023 Ghana Banking Survey, which we have been talking about this afternoon. Let's do one more headline before we go on our website. Also on the Ghana Banking Survey, Ecobank Ghana remains biggest bank in Ghana. So you can read more on myjoyonline.com/business. My name is Daryl. Thanks for watching. We will be back same time tomorrow.